The big business headline, well, Hyundai India is set to come out with a record-breaking public offering. Sebi, or the market regulator, in fact, has greenlit the over $3 billion IPO. That's really going to be record-breaking. What does it mean for investors? Well, my colleague Puneet from NDTV Profit decodes it for us.
Indian market regulator Sebi has approved Hyundai's IPO to file in India. Now, it is apparently looking to raise up to roughly $3 to $3.5 billion in this particular IPO. That roughly translates to roughly about 20 to 25,000 crores via an equity issuance. Now, this will roughly be about 70.5% stake that Hyundai will be selling in its India entity. And the company has sold roughly about 7.7 lakh cars in FY24. This was up by about 8% of roughly about 7.2 lakh cars sold in FY23. Now, what's important is that roughly about 1.6 lakh cars out of these 7.7 lakhs were exported out of the country, and Hyundai currently accounts for roughly 24% market share for all OEMs which are in exporting cars out of the country. Now, when you look at, as per the DRHP filings filed back in June end, revenue for 9 months of FY24 accounted for roughly about 52,000 odd crores, with EBITDA margins of roughly about 12.7% that the company reported. Profitability was also strong to come in at roughly 4,380 odd crores for FY24, and this was a strong growth from the previous fiscal year as well. When you look at in terms of market share, currently Hyundai accounts for the number 2 position in terms of market share and has 14.6% of the total market share in India. This is number 2 as mentioned, and Maruti Suzuki has roughly 40% or upwards of 40% of market share, being the number 1 player. Although Hyundai has been getting intense competition from the likes of Mahindra as well as Tata Motors over the last 2 fiscal years, they've been able to maintain this market share and is also looking to launch a lot of vehicles in both the petrol, diesel as well as the electric vehicle segment.